Obviously, right now we have a very favorable liquidity environment. Fed's cutting rates. The European Central Bank recently cut rates. The BOJ was on hold. No one expects them to raise their policy rate until maybe December or January of next year. And we have China increasing monetary stimulus. So the liquidity environment is very positive right now.
Okay.
I am very bullish from now until the U.S. election in early November. The United States is borrowing more money, and the Europeans are going to borrow more money. The Chinese are going to borrow more money. The Japanese are going to borrow more money. So everybody's going to do the same thing at the same time. And so the liquidity, the fiat liquidity in the system is only going to increase. And so, the real bull market, if you want to say that, Bitcoin's up 3x. And so I think we're really in the real bull market. But if you've been buying the wrong assets, the real bull market might start sort of, end of first quarter, early second quarter of 2025.
Arthur Hayes begins by explaining that his fund, Maelstrom, is a long-only fund, primarily holding Bitcoin and Ethereum. He underscores that his investment strategy focuses on managing liquidity rather than making fundamental changes to the portfolio. Given the current favorable liquidity environment, Hayes believes there is a unique opportunity for investors. Central banks worldwide, including the U.S. Federal Reserve, European Central Bank, Bank of Japan, and China, are either cutting rates or maintaining loose monetary policies, which fuels asset prices. The Fed, in particular, has adopted a more accommodative stance, cutting rates and injecting liquidity into the market. Hayes is bullish on the crypto market in the lead-up to the U.S. presidential election, as he expects that liquidity will remain ample. However, he cautions investors to start taking profits just before the election, predicting that political uncertainty could trigger market instability.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Obviously, Maelstrom is a long-only fund. We have a big bag of Bitcoin and Ethereum. We also have a lot of early-stage token deals. So we're long. We've always been long. What we're really talking about, at least from our perspective, is at the edges, do we play around with how much cash that we hold? Should I be taking some cash from my non-crypto portfolio and adding it into crypto? That's how I'm going at it. Obviously, every single investor is different, so you can't really take an apples to apples comparison between what we're doing at Maelstrom and what you're doing with your own portfolio. But this is how I'm thinking about things. So obviously, right now we have a very favorable liquidity environment. Fed's cutting rates. The European Central Bank recently cut rates. The BOJ was on hold. No one expects them to raise their policy rate until maybe December or January of next year. And we have China increasing monetary stimulus. So the liquidity environment is very positive right now.
Okay.
I am very bullish from now until the U.S. election in early November. And at that point, I believe until the president is known, and I don't think it's going to be known on election day. I think it's going to take 3 to 6 months before the president is chosen in the United States. I don't want to be adding more risk into the markets. So if I'm putting on risk now, I'm probably going to look to take it off a week or two before the U.S. election, because I believe that whether it's Kamala Harris or Donald Trump, the person who loses is not going to accept the result. Neither will those who supported them. And they will agitate via legal means. They will agitate via violent means in the streets. And any adversary of the United States who wishes to exploit a power vacuum because the president's stance isn't known is going to engage in, military actions against targets that they otherwise wouldn't have done because there's a power vacuum in the U.S. In addition, we have a debt ceiling debate on the 1st of January. The U.S. can't issue any more debt. So we have all these things coming together between the election and first quarter of next year. And so until the president is known and all the legal and people in the streets, all that evaporates, I don't really want to be in financial markets. Once that's settled, then it's off to the races. Whoever wins the election is going to print money. They have their particular programs. Donald Trump's going to cut taxes. Kamala Harris is going to increase welfare payments. But both sides are in agreement that the government's role in terms of how much it spends needs to expand, regardless of where that expansion is. And so as crypto holders, we don't really care what they spend the money on. We just know that they're borrowing more money. And if the United States is borrowing more money, then the Europeans are going to borrow more money. The Chinese are going to borrow more money. The Japanese are going to borrow more money. So everybody's going to do the same thing at the same time. And so the liquidity, the fiat liquidity in the system is only going to increase. And so, the real bull market, if you want to say that, Bitcoin's up 3x since March of 2023. So I think we're really in the real bull market. But if you've been buying the wrong assets, the real bull market might start sort of end of first quarter, early second quarter of 2025. Definitely. I mean, we've surpassed the all-time high of the previous cycle. So I believe we're obviously already in a bull run, right? We're up. The FTX low was what, 15,000, 16,000, whatever it is. We've hit 74 to 1,000, whatever it was back in April of this year. So I think that's a bull market to my eyes, from trough to the new peak. Where do we go from here? Again, it's all about money printing. I think this is, a 2026, 2027 situation. I think the thing that stops the fiat party is a war, because at the end of the day, everybody's trying to take demand from other places. And there's only so much global demand going around. And at some point, there will be war. And that's when the music stops. And so, we find out what our investments are really worth. Volatility super cycle. And yes. I posted a chart, and it had the volatility of the US bond market overlaid with the amount of bank credit that's been issued over time. And my point is that the authorities, and I'm using the United States as an example, but every single government follows the same prescription, they want to reduce volatility. And so every time volatility spikes, because volatility is natural, the universe always wants to become more chaotic, we attempt to forestall that by expending energy. So the way that the governments expend energy is they print money and they suppress market volatility. And every subsequent crisis requires an ever greater amount of fiat to tamper the volatility. So if you think about COVID-19, the United States was the most aggressive in terms of stimulus measures. They printed 40% of dollars that had ever been created were created between 2020 and 2022. So that was the amount of credit that was needed to dampen that volatility event. Now imagine a volatility event if we're going to change the relationship between the major global powers in the world, which is what we're going through, this whole de-dollarization, the multipolar world order, the global south and the BRICS versus the West, all these sorts of things is just a realignment of the deck chairs. And so if I'm an elite in charge of these governments and I don't want things to change, then I'm going to have to expend an even greater amount of energy to dampen this volatility. So I believe the amount of fiat liquidity created to attempt to reduce the volatility of this, cataclysmic, seismic change in the way that economies are structured is going to dwarf any money printing event that we've ever had, which is why I believe Bitcoin can hit $1 million, Ethereum, I don't know, 10, 20,000, whatever the number is. But it's going to be crazy because we saw what happened during, the first pandemic of this century, how much money was created to try to lock everybody in their homes. Well, what's going to happen when the United States is being dethroned by a bunch of other countries and they have to share power? Do you think they're going to go quietly into the night and just accept it? Or print as much money as they can to do what they can to forestall that situation? And the balancing factor is Bitcoin. We love volatility. We love the natural state of the universe. The authorities hate it. And so as they print more money, Bitcoin and other cryptos go up in value. So that's where I believe the real bull market starts. We saw sort of a preview of that, sort of the banking crisis in the US in March of 2023. Bitcoin's up 3x since then, right? They haven't stopped. Republicans, Democrats in the US are printing money. European Central Bank is printing money. China eventually is going to have to print money to stop the deflation in China. Japan has never stopped printing money. So, it's only going to get worse in terms of the amount of fiat going around the world.
Arthur Hayes' analysis paints a bullish picture for Bitcoin and cryptocurrencies over the next few years, driven by macroeconomic and geopolitical factors. He highlights how the increasing dominance of government intervention in financial markets through money printing will lead to a continued rise in the value of decentralized assets like Bitcoin. Despite short-term risks, particularly around political uncertainty in the U.S. and geopolitical tensions, Hayes believes that the long-term outlook for crypto remains extremely positive. Hayes emphasizes the importance of understanding these larger macroeconomic trends. For investors willing to weather the volatility, the coming years could present enormous opportunities in the crypto market. As the world moves toward a multipolar order and fiat currencies face increasing devaluation, Bitcoin and other decentralized assets could serve as vital hedges against economic instability.
When the government is so indebted, they basically take over the banking functions and direct them as they need to buy their debt. And so if you think about it, most banks in the West are private enterprises that do whatever they do as per what their shareholders desire. That was the previous situation. Now, as we move into this hyper indebted situation of governments and the demands of people to have goodies handed out for free, the governments need to take the banking system and say, I don't want you to allocate credit this way. I'm going to fix how much money you make. And your profits are going into buying my bonds, irregardless of what the price is. And so the profitability of some banks could get severely impacted as their decision making is co-opted by the government. Look at what happened in China, right? The return on equity for a state-owned bank is extremely low. Salaries are decided by the government.
Yes.
Right. So how do private banks push back against this? They, engage in allowing people to get into crypto. Now, it's not exactly crypto because most of the time you can't custody your own crypto like with an ETF, but at least the banks are actually offering a way for their customers, at least on a price basis, to escape this financial repression that's going to be foisted upon them. And the banks themselves want another profit center because as they are not allowed to determine the proper price of credit and determine who should get credit and price it accordingly because the government is telling them what to do, they need another way to make money. Crypto is one of those ways. So I don't believe they believe in crypto, but I think at a higher level, and maybe this is they don't understand what they're doing, they see what's coming in terms of the control that's going to be hoisted upon them by the government. Crypto is a way for them to earn money outside of the system, outside of government control. So it's all part of the same sort of situation. Ethereum has been harmed from our interest rate situation. That's changing, right? So the Fed cut 50 basis points. Reverse repo now is 4.8%. I checked yesterday. It's expected that the Fed will cut another 25 basis points in November. It could be more, who knows? And so the forward curve for Fed funds is going to be dip below the e-staking yield, in some point in the next 12 months. And so on a forward-looking basis, Ethereum looks like a lot more appealing as this internet bond. And so I think you're going to start to see ETH awaken again as people are like, oh, okay, 4% is not so bad in a world where I think the Fed's going to go to zero within the next, 18 to 24 months.
Arthur Hayes has always been known for his forward-thinking approach to markets, and his analysis of the current environment is no exception. With a keen understanding of both the macroeconomic landscape and the intricacies of the crypto market, Hayes provides a compelling case for why Bitcoin and Ethereum will continue to thrive in the coming years. As we navigate through political uncertainty, economic shifts, and increasing global tensions, crypto investors have an unprecedented opportunity to position themselves for long-term success.
Please like and subscribe my channel.